Okay, I recording this video on Monday the 3rd of July 2017. Do hope you are doing well. Damn, it is cold today in Sydney. Of course, we're in the southern hemisphere, so we're in the middle of winter. Our high today was only 15 degrees centigrade, which is 59 degrees Fahrenheit, which is the coldest day of the year in Sydney, and it feels pretty chilly. The water's warm though, and we've had some waves over the last couple of days, so it's not all bad. Anyway, we've got 4th of July coming up on Tuesday of this week. Because of that, I think Monday is going to be very quiet trading. I think a lot of people are taking the day off, having a 4-day weekend. So just watch out for that. So we're not going to have Monday. I think it's going to be a really quiet day. Tuesday, no trading. So really, I think back to work on Wednesday next week for proper kind of market activity. Last week, though, was excellent. We had 3 very high-range days. The volumes have been good. The ranges have been good. The ranges have been great, in fact. And the speed of the market, all of that thing, nice, smooth, kind of strong trending moves. So been kind of good trading. Not going to talk about the E-mini, though, in this weekend's video. I want to talk about the Forex markets really briefly because we've had some really nice moves this week set off by Draghi's comments in the Eurozone. But really want to talk about the bond market and what's kind of happening there because I think we're coming up to an important inflection point there, so I want to talk about that. But let's just look at the Forex charts really quickly. This is dollar index chart that maxed out at the beginning of 2017 up here with our exhaustion buy and bearish divergence, and we've been in a downtrend ever since. Signaled really nicely with better indicators. So this is, we had our exhaustion buy bearish divergence. That's the volume patterns that kind of go in. That's the first step in a 5-step setup. Then we have our pullback to end of trends. This is the early one on the lowest time frame. Then we have the intermediate one on this time frame, and then it's all happening around cyclical resistance on the highest time frame. So that's step 2 of a 5-step setup. Then we have the first sign of weakness where we break a support. That's there, and then the low risk entry point kind of comes in, bang. So that's step 4, 3, and 4. That was a beautiful entry point there, and we get confirmation as soon as we're breaking 2 other time frames going on here. So this is confirmation happening at this point here. So step 5 in our 5-step setup. So that's been really helpful for determining the trend kind of on the way down. So dollar index has been weakening and all the other major currencies have been strengthening. So this week's activity, we had a really nasty down day a couple of days ago, and I think that was all set off by Draghi's comments in the Eurozone. Question is, you know, we're coming up to a support on the highest time frame, potentially an end of trend, you know, go off at some point this week. Is it the end on the way down? I don't think it's the end, but it's an important inflection point and an important level that we've reached. So if we go back, we got this really big blue professional bar. Anybody recognize the dates? Yes, it was the election, the Trump election, where everything kind of changed. And we had the US dollar take off and a whole bunch of important turning points in markets happened on that day. Actually, I'll show you on the bond charts, the copper charts, all of those charts. That day was incredibly important on all of these charts. But anyway, so the big blue professional bar, the low of that blue professional bar has now been reached. So it's been an entire U-turn. We've had this, you know, uptrending move to the end of the year and this downtrending move, stair-stepping all the way down to reach that point. But we haven't reached an exhaustion sell signal. You know, we've not shook everybody out of this trade. So I don't know if we're going to get a level that's as high as this one that we've reached over here, about 161,000. But I certainly think we ought to reach something similar to this reading, which was about 134,000 on the downside. So we're only at 61 at the moment. So we haven't really had capitulation volume for the dollar index on the way down. We've still got to put in pullback to end of trend on the intermediate time frame as well. So it's an important level that we've reached at that point, but I don't think we're done on the downside. And so we're still showing a downtrending move and not enough activity to kind of bottom that. So this week, dollar index got slammed and the other currencies took off again into another kind of continuation of this uptrend. So this is Euro chart. You can see all these big blue professional bars. Normally, I'd say, you know, big blue professional bars, watch out for those. They're kind of profit-taking and so on. Again, the levels don't show exhaustion buy. Levels kind of going on. Again, we've got resistance on the highest time frame. At some point, we'll put in an end of trend and so on. And again, it's mirroring the top of that 9th of November bar there. So it's an important kind of psychological level in the market, but I still think we're going to push through it at some point. And there we go. We've got the reverse happening on the multiple time frames, better indicators. There's our low risk entry point, comes in, bang, right at 107, down here on the lows, and then we've been an uptrend ever since. So Euro chart is strong, and British pound is also strong, similar kind of reads here. At some point we will have resistance come in on the highest time frame. We play back into that level. I thought, with this week's or 2 weeks ago, I thought maybe we'd reach that, but with today's activity or this week's activity, big blue professional bars kind of taking off. This one held at this point here, so we've kind of gone to the upside again. So we've still got to travel a little bit further on the pound before reaching that resistance point. And again, the levels on better momentum are not extreme yet. Elevated, but not extreme. We've got to go see something kind of big on the upside. Commodity currencies, so the Canadian dollar and the Aussie dollar, showing a slightly different kind of pattern. So with these markets, so for example, the euro and the pound, each of those bottomed at the beginning of 2017 and have been rallying ever since. With the Canadian dollar and the Aussie dollar, they actually spent more time continuing their downtrend. So that's 2017, and they were still making new lows. But now with the Canadian dollar, we've had exhaustion sell, bullish divergence come in here, cyclical support on the highest time frame, and then we've just busted up through these resistance levels here to get this thing going on the upside here. We're in a confirmed uptrend, breaking both time frames on the Canadian dollar, and I think Canadian dollar, I think the central bank in Canada is talking about raising rates. That's kind of was the impetus for the move kind of to get going on the Canadian dollar. But that's kind of triggered, having been weak, we've now got support coming on the highest time frame, busting into an uptrend. Similar story on the Aussie dollar. So again, this is 2017. We found a little bit of a bottom, came into resistance here. We've had this weakness to play out into mid-year, and now we've had blue professional down bar, gets caught nicely, we rally through there, through resistance, bang, into an uptrend going on here with cyclical support on the highest time frame behind us. So we've got the Aussie dollar strengthening, we've got Canadian dollar, British pound, euro, and so on, and that's why the USD is having trouble. Japanese yen will be the other kind of currency that is having a little bit of trouble. Yeah, we've had strength, but it's kind of gone nowhere. We've been batting backwards and forwards in this range, kind of, mid 80s to low 90s, kind of here. For me, I'm looking at this bar. This is, Wednesday's big blue professional bar here. Came in at the low of that last big blue professional bar, so we're kind of playing the ranges of this activity here. We had a false breakout. We've come down to test. Question is, are we going to hold here? We're right by a cyclical support here on the lowest time frame. So this has got to catch. We've got to break through the highs of that blue professional bar to show that we've got strength in the Japanese yen. Until we see that, jury's out in terms of the yen. We might be kind of running out of steam here. Cyclical resistance on the highest time frame may come in, and that energy may play to the downside. But let's wait and see. Let's see what happens over the next few days, this week's activity with that blue professional bar, and whether it holds and we catch and we kind of rally from there, or it kind of breaks and continues this downtrend in the Japanese yen. So there we go. It was big moves in the currencies this week, and it was all kind of driven out of Draghi's kind of speech. But let's talk about bonds. Bonds, we've had this pattern where we had exhaustion. Wasn't exhaustion sell on the downside. It was a big read. Didn't generate an exhaustion sell, but we got pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, all syncing up with support on the highest time frame here. So this downtrending move basically found an area of support down here. We broke into an uptrend at this point, and we had exhaustion by getting that move going. And then we've had some nice blue professional bars taking off to the upside, and then we've had this last one kind of take off into the highs, and now we're back down with this week's activity to lows of that blue professional bar, and we've got cyclical resistance on the highest time frame due at some point. Let me see if I can just pull that up for you. Better sine wave 2, turn it on. So there we go. That is the cyclical resistance on the highest time frame, which is about to cross at some point. So it's kind of been nice, kind to us from the support to resistance, but at this point we're kind of running out of steam. The question is, are we going to continue to have a rally in the US bonds, or is this due to turnover? Again, you know, this date was incredibly important. This is November 9th, again, election results here. We've come back up to test into that breakdown level on bonds, and we kind of got rejected right at that level there that we kind of broke down, ended up being the high, so we bounced off that. Support becomes resistance on the way down here. Now, I've been watching, Zero Hedge has been very kindly publishing some of Jeff Gundlach's updates that he's doing on a regular basis. And he's kindly releasing all of his kind of thoughts and work to the marketplace, which I think is very kind of generous of him. And I've been struck the last couple of times that I've read his work about a piece of analysis that he follows quite strongly. I don't actually think it's his to start with. I think Adam Robinson, who I'll link to below this video, very interesting guy, originally developed. And this is the ratio between copper and gold. So let me just show you what I've got on these charts here. On this chart here down below, we've got at HG, continuous contract of copper, and at GC, which is the continuous contract for gold, on two symbols on here. And all I've done here is on an indicator, just add on a spread indicator, which is the ratio of the close of data 1 and data 2. Very simple indicator kind of there. So what Adam Robinson, Jeff Gundlach have done is look at the ratio of what gold is doing, what copper is doing versus gold, and found that there's a very high correlation between that and the interest rate on, for example, 10-year treasuries. So this is the ratio, and this is the interest rate on 10-year notes. Just divide this by 10, and that'll give you what the current rate is. This is 2.302 on 10 years at the moment. So you can see it's incredibly high. Some of the correlation analysis that I've seen, you know, says that this is in the high 80s to low 90s in terms of correlation. So really interesting. Why does it work? Well, copper is, you know, an industrial metal that goes up in value when we have growth, global growth particularly. And then gold tends to be a safe haven, somewhere where people kind of go where times are looking tough or uncertain. And so, if you like, it's kind of bull versus bear. So if copper's going up, things are looking up, and if gold's going down, you know, things are looking up. If gold is, we get the reverse. If copper's going down, you know, economic growth is down and gold is up, then people are worried about the future and political uncertainty and so on. So at the moment, what we had, I mean, this marked the low in bond rates at the middle of last year quite nicely, with that ratio kind of rocketing forward. Let me just put this on with, you can see actually where it was on particular days there. So it was trending quite nicely, and we kind of backed into a little bit of weakness in rates, and so bonds have been strengthening. But with this week's activity, we had a takeoff in copper, continuation of the rally in copper, and gold is looking very uncertain at the moment. So that ratio has spiked up, which would suggest that rates are going up and bonds are going down. So we've got this cyclical turning point happening in bonds. At some point there's going to come in. We've reached this really important inflection point. Support becomes resistance at this point here. We've maybe kind of just run out of steam on the way up in bonds. And it's almost clearer on the other charts when you look at gold versus copper. So let me show you what we're seeing on the gold chart here. So again, we had the top in gold, this last top in gold being made after exhaustion buy, bearish divergence, and some flush patterns. We had some end of trend on the intermediate time frame, and then we broke into a downtrend here. I mean, this is a classic 5-step setup for a move on the downside, and there's our low risk entry point. Bang, up here. which came in just under 1400, and bang, we've kind of dropped off nicely. The rally that we've had has been really uncomfortable. It's like, these big kind of trending ranges. It's almost like a complex correction where we see stair stepping rather than a proper trending break on the upside. But over the last week, what we found is we found resistance on the highest time frame, resistance on the intermediate time frame. We've started to break supports on the lowest time frame here. We're just playing with that level at the moment. And so this has the possibility of breaking into a downtrend with resistance behind us on these two time frames. So that would suggest that we're going to have weakness in the gold market and go test, the 1150 at 1100 type level kind of there. So gold on the way down. So in terms of this ratio, we want copper up and gold down for it to strengthen. So there's the gold down kind of story with the multiple time frame indicators there. In terms of blue professional bars, again, what have the professionals been doing? Well, we had a nasty down blue professional bar, sunk through the lows of that. This kind of area here, we're just hovering around the lows of this U-turn that we had, that kind of lost interest in, kind of backed away from there. So suggest gold is looking pretty weak at the moment. Copper, what's copper been doing? So copper here, this was interesting, kind of back here. Was this, it would have been this again. So this is this November 9th dated again, but you could see the rally in copper was starting early, right out of the gate here. These are blue professional bars jumping the creek here, and we had an extraordinary move over the course of 2 weeks in copper, which ended up being exhaustion buy, and then finally topping out with a bearish divergence and pullback to end of trend. And so we maxed out at 285 here on the copper, and ever since we've just gone back to test into the lows of this breakout activity. Now again on copper, we are coming up to a cyclical turning point on the highest time frame. So there it is. We're due for that cyclical cross on the highest time frame. With copper here, we've had a blue professional down bar that's held, and that's almost like a U-turn. So the bar on the way down, they force it on the way back. We test into the lows of that one again. It's all holding, and we're starting to break we're not breaking above resistance yet, but our support levels are holding, and we've got a third one on the highest time frame due here. Still showing weakness at the moment, but as soon as we pop above a resistance on this chart, that'll signal strength in copper. So gold is looking weak, copper is looking strong. Therefore, this ratio could start to move ahead, which means rates going up, and then bonds, we'd have that turning point in bonds kind of coming in. So I think that's really interesting. That's the work that I think Adam Robinson pioneered, and then Jeff Gundlach has kind of done the most to publicize. But I think it's interesting in terms of turning point in bonds kind of coming up. So rates to continue higher, bonds to go down, gold to go down, and copper to continue to strengthen. Now, one way of playing that move in copper would be through the ETF. So this is JJC, which is tracking that. It's just non-leveraged. It's just a straight play on copper. So it's a way of trading it without getting into the futures kind of market. It looks identical, really, to the copper futures chart. In terms of that activity with blue professional bars and so on, you can see here where we kind of maxed out. On this chart, the weakness, we've already had signs of strength here. We've broken above resistance, and you can see we're starting to break into an uptrend here in copper. Obviously, that 32 or whatever the high was up here level is 32.18 is going to be kind of critical to get through, but we're a little bit of a ways off there for the time being. And up here at 285 or whatever that resistance is, 285, 286, kind of on the way up. So we've got a little bit of travel to go see and test that. So let's see what kind of happens there. But anyway, that's a way of potentially playing this JJC, and then starting to short bonds on this chart as well. So there we go, a couple of charts to show you what's happening in dollar index, and then a turning point kind of at some point. We're going to get confirmation on that on bonds. So I'm going to be looking for that over the next few days and weeks. Anyway, hope your trading is going well, and I hope you're enjoying a long weekend.